Thank you for tuning in to TTV. I'm your host, Toya, and today we are talking about life insurance. That's right, life insurance 101. So let me give my disclaimer right now. If you are one of those people who don't have anybody that you care about, nobody that is going to mourn you or that you care is going to mourn you, this is not the video for you. So if you don't care about what other people do, you say that you can just burn my body, throw it in the shoebox, and put it out with the trash, the Monday trash, then this is not the video for you. If you care about somebody, if you have dependents, if there's somebody that you love, that you would want to see live better than they're living today, okay, or who depends on you for their own survival and existence, then this is the video for you. So I am going to be breaking down the basic three types of insurances, okay? As far as life insurance goes, there's really only three types. If you break it down, they all boil down to these three, really two, but I'm including one of them and you'll see why. But if you have somebody that you care about, then you want to listen to this video. But before we get started, please like, subscribe, and share. Because if you get anything out of my videos, chances are someone else will as well. So share with those that you know, love, and care about. Also, that's part of my own personal mission is that I do want to educate people, which is why I'm doing a video like this. All right. The other thing is please check out the links below for my book tease collection. You may have heard me talk about this recently on Critical Conversations. I did this on, I believe it was Monday. No, today is Monday. So Saturday. Yes, it was on Saturday. So if you want to see that, you can go out to my page, my Facebook page. It'll be on there. So the Facebook page is Latoya Armstrong. So go out into my Facebook page and you'll see it listing for my interview with Critical Conversations, where I spoke about my book, and I even read the first poem in there. Also, there's a link down below for Young Living, which is for essential oils. And so that's enough with all of that. Let's get started, okay? Also below, I'm going to have contact information. So if you want to book an appointment with me, you'll be able to do so with the link down below. And let's get started, okay? So basically, there are three types of insurance, okay? So most people know about group insurance. Group insurance is what you have through your job. The second one most people know about is term insurance. And then the third one is whole life. Okay, so these are the three that we're going to be discussing and talking about today. All right, so let me start out with group insurance. So one of the things that I hear a lot from people when it comes down to getting life insurance, they say, I have it through work. And if you have it through work, that's good, especially if it's really, really cheap. Okay. But the problem with group insurance is one, should you no longer work for that employer, it does not go with you. Okay. Two, if you go out on a medical leave, and even in some cases vacation, or if you're away from the job for a certain amount of time, you are not covered. Okay. And then three, it does not give you the coverage that you think is going to give you. It's usually a very small amount. Okay. So those are the three things about group coverage. Now, if it's cheap, I know, like when I was in corporate America, I think my coverage, my group insurance coverage, which one was only accidental death, which it means that there would have had to be an accident to happen in order for me to get, for my beneficiaries to get paid off of. It only cost me like maybe $4 or $5 a month, something like that. It was really cheap. And if that's the case, if it's cheap or free, and when I say cheap, I mean like $20, $30 a month or something like that or under, then actually, no, I wouldn't say $20, $30 a month. I would say more like 20, 15, 10, something like that. Then yes, it is well worth having. Go ahead and get it. It's just extra coverage for while you're working at that job, especially if you are in a position or in a job where your physical being is at jeopardy. Okay, so that's a different kind of liability. But anyway, boils down to it, if your job offers it, great. But do not count on that to cover everything that you need. It's really like just a liability insurance, okay? And they're required as your employer to have it because it covers the cost of replacing you. So if for some reason something were to happen to you, it will cover the cost of them having to replace you, which is why it's not usually covering you when you're out sick or something like that, because you're not technically working. So that's group insurance. So again, if it's cheap, get it. Great, have it. but do not count on it as your only means of insurance. One of the things that we say is almost like a hospital gown that they give you when you go into the hospital, where, yeah, you're covered in the front, but your back end is wide open and exposed. So it doesn't give you the coverage that you think it does. Okay. So that's number one. Number two, we're going to talk about term life, okay? Because the ones when you get into people getting their own individual insurance, the two types that they usually bounce between is some kind of term life and some kind of whole life, okay? So I'm going to break both of these down just so you can have a better understanding of what they are and the kind of coverage you can expect to get from both, okay? So what term life, okay, is just what it says. It's just for a term. So that term can be 10 years, 15, 20, 25, 30, 35 years, depending on the company that you're going through, will depend on how long that term is. It also depends on your age, because if you're 50 years old, you don't need a 30-year policy. You need something more like about 20, maybe 25. Okay. If you're 29 years old, then yes, you want to max it out to that 35. Okay. So it really depends on your age, as far as which kind of term that you're looking for. Now, the good parts about term is one, term is cheap. Okay. So you can get a lot of coverage for a smaller price. Okay. And when we say smaller price, we're comparing that to whole life, which I'm going to get into. So it's a cheaper price for more coverage. Okay. Now, anything, let me give my disclaimer right now. Any examples that I give during this video are just that, examples. You really want to sit down and have a quote, because there are so many factors that can be at play as far as you being covered when it comes to term and whole life. Okay. So you really want to sit down with somebody so they can ask your questions that you would answer, and they can go through the process to really see what it will cost you. So what I'm saying is just an example. Okay. So if you wanted coverage for, let's say, $300,000, term life is going to be a lot cheaper for you to have that type of coverage than whole life. And when I say cheaper, I mean cheaper like anywhere between 100, 200, like it really varies on depending on how much it's going to cost. Okay. But that's why I say get a quote. Okay. So this is just really general information. If you're looking for something specific, again, hit that link down below, schedule an appointment with me, and we can go into more detail. But when it comes down to term life, it's going to be cheaper for a larger amount. Okay. So you'll get more than you will with whole life for a smaller price. The other good thing about it is some of them, like the one that I do, includes other benefits that you can have. So these are called, when they add benefits to it, those are called riders. Okay. And so the riders on term policies can sometimes give additional benefits, like what's called a living benefit. And what a living benefit means is that while you are still alive, depending on whatever the criteria is, or the such situations or circumstances that they have outlined, you may be able to take a portion of that death benefit out. So going back to that whole 300,000, if you had a $300,000 policy and you had a term life policy that gave you, let's say, 40%, then it would be 40% of that 300,000. So that's what, 120,000 that you would be able to withdraw while you're still living, depending on those criteria. So most of the time, the criteria is you have to have a terminal illness. And with that terminal illness, it will qualify you. Now, a doctor has to say it now. So it will qualify you to take that money out. And then you can use that money, depending on the stipulations in that policy, you can use that money as you need it, whether it's to get medical treatment, take a vacation, do your bucket list, see family, whatever it is that you need to do, you can take that money out to do it. Okay. Another benefit it may have is a waiver of disability, a waiver of premium. Okay. Which means that if you become disabled, so let's say you end up in a car accident and you're paralyzed from the waist down and you're a waitress, that means you can no longer do your job. So you are disabled. as far as your occupation goes. So you would be able to, depending again on the policies. Listen, I got to give my disclaimers, y'all. I know y'all saying, Toy, you talk about depend on a lot of stuff. I'm really telling you this stuff to really get you thinking and looking at stuff, okay? This is just to give you general information because I have to cover my butt at the same time because I don't want somebody coming back and say, Toya, you said. No, Toya said these were examples. Now, if I can get this for you, that's when you sit down with me, okay? And we can talk. But right now, this is really just an educational video, just so you have an idea on things to ask for, what to look for, things like that, okay? So a waiver of premium means that if you become disabled, the insurance company pays your premium for you, okay? So these are some of the riders that can sometimes be included in your life insurance policy when you have a term policy, okay? Now, the downside to term is just that. You are basically renting wealth, okay? So you're renting money from a company in case something happens to you within that certain amount of time. So after that term is over, the 35 years is over, 25, 10, whatever you got, once that time is over, you no longer covered, okay? Now, there are some policies to where you can go ahead and renew it and get additional coverage. And sometimes it's going to cost more. Sometimes you can get it with the same. I know with the company I work with, we can actually maintain it. Okay. So you would, if you paid $50 before, you're going to pay $50 after. And it's really what you're looking for. What you want to ask is your renewable. Okay, guaranteed renewability of your insurance. That means that because you had coverage already and your term is coming up, that means you don't have to do a medical exam. You can just go into another term. Okay, so you got to make sure there's no lapse in coverage during that time or during the 10 year period or 20 year, however you got your term. You want to make sure there's no lapse so that when it comes time and that term is up, you can go right into another policy if you need to. Okay, that's if you need to. But that's one of the things with the term. Another downside with the term is outside of the fact that you no longer get coverage, you can't borrow against it as well. And I'm only mentioning this because this is what some people look for, and this is what some agents will actually tell you. Well, term is bad because you can't borrow against it. You can't get a loan out from that policy. And we're going to get more into that when we get into whole life. Again, I'm only mentioning it here because this may be something you hear. Because before I got into this business, that was something I heard, is that you really want to make sure you have a whole life policy because of those benefits. And one of them is you can borrow against it. But I'm going to tell you, so stay tuned, keep listening. You're going to find out why that's not really a good idea. Okay. So term is what I like to use, what I get. So that's what I would recommend is term. And the reason is because we're going to have to get into whole life now. So when you have a whole life policy, what the agent comes to you when they talk to you about is they tell you that it's life insurance and then you'll have a savings account, or it's life insurance is some type of investment account. Okay. I don't care what fancy names they give it to you. That's really what it boils down to, is that they're putting these two things together. And I don't know about you, but most of the time when things are a combo, they don't work right. Okay. And if you think about the VCR, remember we had those, it was a TV, VCR, DVD player. What happened? One of those aspects failed and the whole thing was just really no good. You can only use one thing. You only use the TV. That was the only thing that was working on it because the CD player no longer worked, or the VCR part no longer worked. And if you don't know what a VCR is, then go talk to your parents because you're too young. Making me feel old. But anyway, but that's what they get you on, is they say that it is a life insurance policy as well as a savings account or investment. And they come up with all these different fancy names for it, but really that's what it boils down to. Now, the benefits of it is, well, I'm going to tell you the benefits that they tell you. Okay. And again, this is what I heard as well before I got into this business and started doing this. So I heard these same things. This isn't something I'm just making up. This is what agents actually say to try to get you in whole life policies. They tell you that, one, you can borrow against it. You can use it to save money. You can use it to help you on your taxes. You can do all these different things, which, going back to the term life, that's another thing. Death benefit. this is one of the things you want to ask about. You want to make sure that the death benefit on that term policy is tax free. Okay. And usually what term it is. Okay. But when you get into the whole life, what happens is okay, and I'm going to use some examples, and remember, these are just examples. This is not nothing definitive. I'm not telling you this is how much you would pay or anything like this. This is strictly just an example. Okay, so let's say you get a whole life policy. Okay, and the agent tells you, oh, it's a savings account and it's an investment account, and you can borrow against the savings part. So that cash value is what the savings or the investment part is called. It's called your cash value. So you can borrow against your cash value, and you still have the coverage of insurance. And you only have to pay, let's say, $300 a month. Okay, and out of that $300 a month, we're going to put $200 in the cash value, and $100 is going to go to your life insurance policy. Okay, and that's how they're going to break it up. And then they're going to have you tell you that what you can do is let's say you miss a payment or something like that, it can come out of the dividends, or it comes out of the interest that you get for that savings part to help pay for the insurance portion if you need it. Okay, now if you borrow against it, you got to pay 6 to 8%, somewhere around there, give or take. But it's usually between 6 and 8% that you have to pay interest on that money that you borrow from. Now, let me ask you this question. Do you borrow your own money? Like if you had $400 sitting on your desk and you needed 200 of it, are you borrowing your money, or are you just taking 200? It's your money, right? So if you're borrowing against it, that should be a red flag right there, because if you have to borrow it, it's not yours. And you're saying, Toya, how is it not mine if I put it in there? Keep listening. Okay, so like I said, you borrow, take a loan, 6 to 8%. The other part that they sometimes don't tell you or advertise is that a lot of times that death benefit they promised you. So you told you that $100 goes to that $300,000 death benefit for your insurance. Okay, well, they don't tell you that you don't know, your beneficiary won't get that money from anywhere between 1 to 5 years. Okay, depending on what that policy is. It could be, something happens to you after a year, then the death benefit will pay out. Or if something happens to you after 3 years, which is most common, then the death benefit will pay out. And even sometimes, like I said, up to 5. But your benefit will not pay. So you walk in, you get that life insurance, you walk out, you like, cool, I got life insurance, I'm cool. No, honey, if you die within that first year or 2 years or 3 years, whatever it says in that policy, your beneficiary, the people that you leave behind, they don't get anything, okay? All they get is the premiums you have paid and plus some interest. That's it. That's all they get. They will not get that $300,000 that you pay for that insurance at all. Okay. And even with some term policies, you want to ask that question. Like, when does the death benefit pay out? Am I covered from day one? Or do I have to wait a year, 2 years, 3 years before my beneficiaries will benefit if something happens to me? That is a huge question you want to make sure you ask. Okay. Now, the other part of that whole life policy that they don't tell you about. So we already talked about the borrowing, how you have to borrow your own money and you have to pay it back. Because if you don't, it's going to come out of that death benefit. So if you took $50,000 and your death benefit was $300,000, your death benefit now is $250,000. Okay. The other part that they don't always explain, because I'm not going to say they don't tell you, because I don't know, I wasn't there. But one of the things they don't explain to you is that over time, what happens between that premium and that cash value that you put in. So going back to the example I had, you have $100 going towards your insurance, $200 going into the cash. Okay. So your cash value is building up, and you're only paying so much, that $100 for the insurance. So it's almost like a term policy and a savings account put together, because that's really what that insurance side is. So you got the cash value coming up. But what happens is that premium also starts to go up. And at some point, if you ask for the schedule, okay, you want to ask for that cash value schedule. When you look at that schedule, you'll see at some age, you're going to see what ends up happening is that the amount of the premium for your insurance and the amount of the cash that you're putting in is the exact same amount. Okay. And then what happens is the insurance starts to keep going up. But your premium that you're paying and the cash value part of it is staying the same. So that premium is rising, but the amount you're paying is staying the same. So what's going to happen is that cash value is now going to start trickling over to cover the cost of the insurance. And what end up happening is that insurance will get to the point where it exceeds the amount of cash that you're putting in and eats up all the cash value that is actually in that policy. I know that was a lot, so I'm going to repeat it. What ends up happening is the insurance side of that premium keeps going up. It keeps rising, even though they're not charging you anything different. The amount of money you pay is the same. The insurance side is going to go up. And what happens because you're not putting any additional money in there, you're not covering the cost of the insurance. It's going to take out of your cash value. So your cash value is going to go down, your insurance premium is going to go up, and what ends up happening is you end up paying everything. All your money and your cash goes towards the insurance side of it, and they don't show you that. Okay, they don't talk to you about it. They don't tell you about it, which is why it is important to read read the policy. Okay, even get a lawyer to look at it if you need to, but really read the insurance. Ask those questions. Ask them if there's a point where the policy starts to eat itself. The other thing is I actually looked at somebody's policy, and this is the other thing about whole life that you want to ask about. I looked at somebody's policy, and their policy literally said that it will not reach cash value. That there's a chance that the death benefit that you applied for, that you think you're getting insurance for, there is a chance that even if you pay, never lapsing in your payments, the life benefit, the death benefit will never reach that full amount. Okay? Because whole life usually goes to age 100. So by the time you reach 100 is when everything becomes face value. But the problem is if you put in $200 a month into the cash side, and that cash side, the insurance side started out at 100, but now it's $600. Then it's taking a portion out of your cash value to pay for the insurance. The insurance now, it's not really worth it. The other thing is most people go in thinking that, okay, so if I save this money and I do this investment part of it, and I got this death benefit with this insurance, then when I pass away, my family's going to be set because they're going to have the cash that's in there and they're going to have the death benefit. Well, remember what I told you, the death benefit, it is a possibility that your policy will never make that benefit. So if you have 300,000, it is a possibility that your life insurance portion of that whole life policy is never going to reach $300,000. So it's very important that you read. Okay, this is what I'm saying. Read, ask those questions. Okay, have them explain it to you. Have them show you in the policy where it says exactly what they're telling you. Okay, so again, this is just an example, but if you had one where you had a policy was 300,000, that's the death benefit. So you think your family is going to get 300,000 if something happens to you. In addition, you saved $100,000 in that policy. What's going to happen is that insurance company that you have that whole life policy, if something happens to you, your beneficiaries are only going to get one or the other. It's whichever one is largest. Okay, so in that example, 300,000 is the policy, 100,000 is what you put in the cash. Your family gonna get 300,000. And you say, but Toya, what happens to that 100,000? I look at it as you just help the insurance company pay your death benefit, because that's what happens. And again, that's if your policy even reached the 300,000. Okay, if it reached 300,000. So they're only going to get whichever one is the highest. And remember, again, another if. That's only if you died past that period of that starting before the benefit actually begins. So if your policy says that this death benefit doesn't happen until 2 years into the policy and you died on year 3, then yes, they're going to get one or the other. Okay, so there's stipulations to the payout, and you want to ask those questions like, what are the stipulations for the payout? Will my policy, if something happens to me and they tell you that you have to wait 2 years, so that year 3 something happens to me, how much would my family get? and have them explain exactly how much they're going to get. Oh, well, you got the death benefit for 300. Okay, that's what you're telling me. But will my family actually get 300,000? Or will they only get whatever the value of that insurance policy is at that time? Ask them, when does this policy reach the 300,000 as far as the insurance side? Like, when do I get to 300,000? And so there's a lot of questions you need to ask when it comes down to the whole life part. The other part is too, is that saving side and that investment side is not tax free. So if something happens to you, and let's say, going back to the example I had, let's say you had a $300,000 policy, you saved up 400,000, your family is only going to get the 400,000. Thank you. You pay for your own death benefit. The insurance will send that check off and say, thank you. We ain't have to pay a penny. Okay, that's what's going to happen. You just pay for your stuff. So you paid a premium every month to pay for your own death benefit. That's really what it boils down to. So again, you want to ask these questions. So I'm giving you, even though I'm kind of joking about part of it, this is really serious. Okay. And I really want to make sure you understand exactly. There are so many stipulations when it comes down to the whole life. Okay. So you want to make sure you're asking all the necessary questions. So you want to know, one, when does the policy actually reach the death benefit? Number two, when does my coverage for this start? Number three, if I have $50,000 in cash value and my policy is 300,000, is my family going to get 350,000? And if not, how much will they get? Okay, so you want to ask these questions. And then the tax part of it, they tell you about these tax breaks and things you get. Well, guess what? Any interest you get on that savings part, any dividends or money or capital that you make off of those investments, guess what, baby? They're going to be taxed. Okay, they're going to be taxed. Okay, your family get that cash value, it's going to be taxed because it's not a death benefit. It's going to be looked at as income. So again, you want to ask the questions. I know, again, I'm trying to make light of it because I know this is a topic when you talk about finances and you talk about life insurance, people are kind of hesitant and don't really want to talk about it. One, they have these superstitions about how if I talk about it, then that means I'm predicting my own death. Or they have these other feelings like, okay, I don't want to think about my death. Well, guess what, honey? Think about it now. Think about it for the time it takes to put it together. Even have it to where it comes out of your account and you don't have to think about it later. So think about it at this one moment so you can get it set up. Again, at the beginning of the video, I said, if there's nobody you don't care about, you don't care what happens to your body, you don't care about nobody you leaving behind, ain't nobody depending on you, then don't worry about it. Don't get it. But if you have anybody that you care about, if there's anybody that depends on you, so we're talking children, we're talking elderly parents, we're talking about maybe it's a child or a sibling that you have that maybe they need extra care because of some kind of disability that they have. If you have anybody that counts on you right now, today, at this very moment, you should have life insurance. Because if something happens to you, they're not only losing you, they're losing your support. Okay? They're losing your support. So if you help your mom out, if you go over there and you cut her grass and you shovel her snow and it's, something needs repair, you're the one that goes over there and make sure that, you call people to get them come out and all of that, then she's going to need somebody she's going to have to hire somebody should something happens to you. So why not have that money available for her so that she can hire somebody? If you have a spouse or you have children, you want to make sure you get that life insurance, because if they lose you and they don't have the money to come up with to cover your burial expenses and cover your income that they're losing, then guess what? They don't even have time to grieve for you. They don't even have time to take that mental break that they're going to need. They're going to have to sit back and they're going to have to figure out, one, how are we going to come up with this money to bury this person that I love and care about? I don't want just a $300 money that the state might or might not provide to help for the burial. I don't want to dump out everything in my savings account and it's still not enough. So now I got to do this GoFundMe. Now we got to have this fish fry, this bake sale. I got to ask people to help me. I got to see if I can take out a loan, max out my credit cards. You don't want to put yourself, your family, or the people that you love in that situation. Okay, because if you watching this, that means that you're not that first person that I talked about that just don't have nobody you care about. So you care about these people, then give them the mental break that they will need as well. Okay, and that's really what it boils down to with when it comes down to insurance, because none of us, even if the doctor gave you a date, none of us know when our day is coming. Even if the doctor told you you got 3 months to live, you can die in 2 weeks or 2 years. So even a doctor can't tell you when your death date is. Nobody knows. So you can die tomorrow, you can die 10 years from now, you can die 100 years from now. The point is none of us know. So do we really want to take a chance on leaving this behind to our family? I know it's difficult to talk about. I know a lot of people don't want to talk about it. It's very emotional. It makes you feel vulnerable, especially when you get in talking about finances and debt and how you're paying off debt. All of those things make us feel very vulnerable. But there are also conversations that we need to have. And like I said, you can have a conversation long enough to get it set up and taken care of, and then you don't have to think about it again until it's time to renew or come back to it. But if you don't get anything else out of this video, just understand that. Get you some life insurance. We all need it. Okay. Like I said, if you have anybody that you love and care about, you need life insurance. All right. So that's it for today. I hope you got something out of it. I hope it was clear. Like I gave you your options. You should understand group insurance now. You should understand term insurance, and you should understand whole life insurance. And also know the questions that you need to ask. Okay. Ask the questions. If the agent that you dealing with has a hard time or a problem with you asking questions, one, don't go to that agent. Don't go to that agent. An agent should never have a problem answering a question that you have when it comes down to what you are purchasing and what you are putting your life in stake at, okay? Because this is what's going to take care of and protect the people that you love and care about should something happen to you. So if an agent doesn't understand that and they don't want to answer those questions, or oh, why are you asking that, or what, that's not really invalid, if they try to beat around the bush giving you politician answers or something like that, you don't need to be with that agent, because they're already trying to hide something. They're trying to pull the wool over your eyes, as the old people used to say. And that's not somebody you want to be with. If they should be willing to answer your questions. They should be willing to show you in the policy what it is that they're talking about, or where it states, or what's going on. They should be willing to answer any question you may have. And if they don't, because I'll be the first one. If I don't understand something, or if I don't know something, I'll be like, you know what? That's a good question. I haven't gotten that question before. Let me reach out and find out. That's what a good agent is going to do. They're going to make sure you are educated and that you feel comfortable in what it is that you are purchasing. So if they don't make you feel comfortable, they got a problem with you asking questions, get you a different agent. Go someplace else, because they're not the ones for you. If you go in there and you have an understanding of what it is that you want, listen to what it is they're saying. But that doesn't mean that you have to go with what they change your mind on what it is that you want. Okay. So anyway, that's it. This is long enough. I got all the information out that I wanted to educate you on. If you have additional questions, again, I'll put down the link down below so you can reach out, schedule an appointment with me. The other thing is too, is there is an email address down below as well. If you want to email, ask me some questions. Okay. I feel I will always be willing to answer your questions, okay? Because I just said that, right? If an agent isn't willing to answer your questions, then that's not the right agent for you. So if you have questions, like I said, there's an email down below. You can email me. If you're watching this on Facebook, you can direct message me, okay? Just go to the message one and message me in Facebook Messenger. All right, so that's it for today. I'm sorry, I know this was a long video, but it was a lot of information I did want to convey to you. So I hope you do understand what group life insurance is, what term life is, and what whole life is, okay? And yes, if you couldn't tell, I recommend term. But that's just me, in my opinion. Again, I educate you. You make your own decisions, your own choices, okay? But I love you, and I'll talk to you later.